Hey everybody, this is Jim at SP500chart.com. It's a little bit after the open on March 12th, 2013. I'm going to do a real quick video on GLD, the gold, paper gold, as a proxy for the actual metal. Before I do so, I want to remind you that www.sp500chart.com and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research, and you should be making investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. Hey, I'm just a guy who draws lines on charts, but I've had pretty good luck with gold, so let's take a look. Okay, guys, we're looking at GLD, the as a proxy for the actual precious metal. And there are a couple things that are interesting about this chart, and a couple that I want to point out. First off, back in 2009, late 2009, almost everybody you heard who was talking about gold was talking. Now let's do this just for the sake of argument. This is what the chart looked like back then. Okay? Forget everything that's in this gray square. All we could see, or we could do it this way. This was all we could see. And just about everybody and their brother was calling for a gold double top, and I'm going to use this as an object lesson in why in a bullish run there are multiple times when you can say, oh, that's a double top, and you'll be wrong most of the time. So going back even into 2006 and 2007, somebody could say, oh, look, gold ran up and now it's come up. Oh, that's going to be a double top. No, this was a continuation pattern, basically a not perfectly formed, but a triangle. Okay, and once that fairly symmetrical triangle, really not enough touches on the top. We had a big gap here where nothing happened up at this top level. That would have made it a better formed pattern. But just the same, you still could draw this line and say to yourself, if we get over this line, then gold should go up. Okay? Gold did go up. And you can see that came back down right about almost exactly, if we snap a horizontal line, came back very close to the breakout level of that triangle pattern, then started to rally back up, and this was where everybody was saying double top. Well, I was not one of those people, and I'll tell you why. It's not because I'm smarter, it's just because I saw something else in the chart that told me this is not a double top. And what I'm going to tell you relates somewhat to what we're seeing in gold today, because we have another, quote, potential double top here and here, but I see it a little differently again. And one of the reasons why I didn't think this was a double top was if you draw a little line from this peak to this peak right here, you could see we actually had another triangle. And once that broke out, we measured the height of this triangle. The height of that triangle said we're going to get over this line here. And those of you who like to read charts may recognize this entire pattern as a continuation head and shoulders pattern. And once that broke out, what happened is it served as a continuation pattern, and gold just kept going up. The breakout point for that was roughly about 1,000. So that also helped. The fact that it got over that $1,000 GLD, got over that $1,000 level, then that gives you 100 in this. And I know it's not an exact correlation, but in rough terms. So anyway, there you have it. We had a triangle that worked. We had an inverse head and shoulders continuation that worked. We also started this little channel right here that worked for a long time until it broke in late 2011. Tried to recover in 2012, couldn't quite make it. So gold has been trading sideways for a year and a half, essentially, and it is currently at the lower part of that sideways range. That's one reason why I'm bullish right now on gold, but with a caveat, and that is, when you're looking at a chart, and I'll show you another thing about this chart that's important, is that I've got a stop in mind, and where I entered this, my stop is 3%. Is 3% under where I bought. Because if that breaks, then gold will probably go significantly lower, maybe even down to the 1200s again. But I don't think that's going to happen. So let's take a look at, we're in this blue channel, came up, and by the way, I did a trade right here in early 2011. Honest to goodness, I kid you not, and I'm not using GLD. I'm using the actual gold price. I got gold within 2 pennies of the low right here. Now, where did I screw up? Where I screwed up was I sold it right here. It was a nice trade, but I sold it about 3 months later, and really should have held. Could have made a lot more on that trade, but didn't want to get greedy, and in that case I probably should have gotten a little greedy. But anyway, what happens is now once it ran on up to over 1800, then we could draw this nice little line over 3 tops and see by golly, those 3 tops all line up. What are the chances? Well, that's the way charts tend to work out. Now let's do a little exercise here. I'm going to take this green line for the tops and create a parallel line, and then I'm going to move it hold on just a second. I'm going to move it kind of under this low right here. And you can see we've got some little candles that tail down underneath that, and this is a weekly chart. And as I look at this and I look at where gold is trading right now, I don't think that's the right line right there. I don't think we should start it here and let it run through this, and we could even do this. But what I'm trying to say is, it looks to me that gold is likely to find support right around here somewhere. And the fact that if we look at a daily chart, and again, here's our line that runs up, then we have this horizontal line right here, but most interestingly to me is this gray line. And we have these 2 peaks on this gray line right here. By the way, there's another little symmetrical triangle that served to continue the move down after that blue channel broke. So the reason I'm long right now is because I see the same kind of, this was resistance, it broke, and I see this recent trip down to near the same levels as the lows of 2012. I'm viewing that as a back test of this broken resistance line that should now turn support. The fact that we have this line, we have this line that should give some support, and then we've got that larger potential channel line that is parallel to our top line up here. All of this sort of adds up in my mind that this is probably a pretty good spot to go long on gold. Now, I am ready to sell, like I said, pretty quickly. If we get down underneath this line right here, then this whole bit of trading that took place over this line then becomes surplus shares. The balance will have been broken, and gold should then head down into the mid or around 1300, maybe a little lower into the high 1200s. But guys, there you go. I just thought I'd share that idea with you. And also want to take the opportunity to let you know, if you like this kind of analysis and you follow the S&P 500 kind of as your bellwether for the health of the markets overall, and I think that's a wise thing to do, I want to ask you to come check out sp500chart.com. I do a daily video Monday, Tuesday, Wednesday, and Thursday after every day's close, unless some circumstance just prohibits me from doing it. So far, I fulfill that promise 99% of the time. And this is a excuse me, a subscription service, and it's less than $1 a video. I also do a weekly review over each weekend, taking a look back. So look, guys, just come over and check it out, sp500chart.com. And if you want to see if this stuff works, I encourage you, go to YouTube and find Old School Chartist. Take a look at that, and you'll be able to see everything that I've done on the S&P 500 over the past roughly 2.5 years. So, look, guys, appreciate you taking time to watch this. Take care.